Nigeria sets its sights on achieving net zero carbon emissions by 2060. How can the country turn this commitment into an engine for economic growth and global competitiveness without leaving key industries behind? Good morning and welcome to another power-packed episode of Business Week. This week we dive into the record-smashing performance of the West African Stock Exchange and what it means for regional markets, and Kenya's bold plan to revive its railway ambitions with fresh financing is also in the news, and Nigeria's inflation roller coaster ahead of the MPC meeting. We'll be talking about that. Globally, we're tracking China's surprising trade surge and the smartphone market's big comeback, as well as the shifting economic agenda in the US under Trump. And in our deep dive, we'll break down Nigeria's ambitious net zero goals and explore how climate action could fuel the nation's economic growth. I'm Rolake Akinkuwe-Filani, your guide to all the big business stories you missed during the week. Stay tuned. As always, we're going to start with a look at global energy commodities. Of course, we always start with Brent crude oil. Let's see what happened. Both crude benchmarks, Brent and WTI, were down at the end of trading on Friday. Brent was down by 0.84% and WTI was down by 1.03%. But actually, both in key crude benchmarks were actually up week on week from the previous week. And of course, Friday's performance also impacted the natural gas market, which was down by 6.15%, and RBOB gasoline. It's still a tight oil and gas market, especially as the US sanctions against Russian energy take root and have raised fears of tighter oil markets. Let's take a look at equity markets from around the world. Of course, we start with Nigeria's all-share index on the NGX. It was up at the end of the week of trading by 0.17%. Over 11,000 deals there traded. Volume of shares traded, 327.83 million shares with a value of 11.8 billion. And market capitalization on the stock market was 62.8 trillion naira at the close of trading on Friday. Let's scoot over now to Africa. Look at that. It was all green for Africa. Joburg especially performed well. Signs of economic recovery in South Africa. The top gainer on the Johannesburg Exchange was Labatt Africa Group, an investment holding company, helping to raise that index there. Ghana was also up by 0.02%. Kenya, Nairobi was up by 0.26%, but Casablanca was down by 0.37%. Let's take a look at European stock markets here. Euro Stock 600 did quite well. Some new entrants into the European stock market there. The market closed at 0.75% on Friday. FTSE London, DAX, CAC Paris were all positive. Of course, signs that perhaps the easing of monetary policy by the European Central Bank will take root. Some also positive economic readings from China that did hold up markets around the world. So good sentiment there at the end of the trading week. Let's look at my top picks from around the world. I'm starting with the West Africa Regional Exchange, the BRVM, known in French as the Bourse Régionale des Valeurs Mobilières. Now, that West Africa Regional Exchange, which is headquartered in Abidjan, Côte d'Ivoire, was up year on year by 20%. We've seen new entrants into that market, companies from places like Senegal, like Mali, like Côte d'Ivoire. It's a relatively smaller market in terms of capitalization compared to your Lagos or your Accra or your Nairobi or Joburg, but still performance has been very positive, was very positive in 2024 with a host of reforms by regional regulators, as well as efforts to attract foreign direct investment and foreign portfolio flows actually into the BRVM. The other interesting thing that has happened on the BRVM is the introduction of digital investment tools for both retail and institutional investors. It must be noted, it's not a highly liquid market, but still a 20% year-on-year gain on the BRVM is a record year for the BRVM over the last decade. So good news there. We might see deepening of capital markets in the West Africa Francophone zone, which the BRVM actually represents. So lovely stuff. Let's move on. Britain is looking to build a rival to OpenAI in a bid to become a world leader in artificial intelligence. Of course, we know the US and other countries are well ahead of the curve here, but the British government is looking to do this in order to also boost jobs as well as become a technology leader. Now, one of the key imperatives for the British government looking at this is really to try and also introduce new aspects of regulation and look at fair data use, privacy and data security, especially when it comes to artificial intelligence. Of course, the exit of Britain from the EU a few years back has actually taken a toll on its leadership insofar as technology on the European continent is concerned. So this is an attempt by the UK to really enhance its prospects as a technology hub for the European continent. Now, Spain is planning to tackle its housing crisis by, get this, the introduction of 100% tax on homes. Now, the government claims that vacant homes in cities like Barcelona and Madrid were contributing to a shortage of housing, and there's a major housing crisis in Spain. Now, the idea here is that imposing a tax would also allow about 500,000 new homes to come on the Spanish market. But, you know, you can already foresee potential challenges around this. First of all, who does the independent valuation of the worth of these homes that will be taxed? 100% tax on a home is no small cake. The other problem here is the potential impact it might have on foreign direct investment. As we know, Spain in the summertime is a huge pull from tourists from around the world, even from here in Africa. It's a popular destination. And there are a lot of wealthy people from emerging and frontier markets and even advanced economies that have holiday homes in Spain, which remain vacant for most of the year, except during the summer months. So it's going to be interesting to really see how the government plans to tackle this. And observers are suggesting that this could set a precedent for similar moves by housing authorities in other parts of Europe. So 100% tax on vacant homes, with exceptions perhaps provided for those who have inherited those homes and who can prove that those homes indeed are not vacant, which again could introduce an administrative and bureaucratic nightmare. The US Supreme Court has upheld a law banning China's TikTok. Of course, there's been bipartisan support for such a ban for many years in the US, and that law has now been upheld by the foremost court in the US, the Supreme Court. Concerns here for TikTok and the thousands of American users and entrepreneurs who use TikTok for their digital marketing, for showcasing their goods and services. This move could actually benefit rivals such as Instagram Reels and YouTube Shorts here. I mean, what do you do against a US Supreme Court ruling like this? Is the highest authority in the land. Of course, Chinese parent company of TikTok, ByteDance, has said it will attempt to challenge this ruling with the World Trade Organization. But that is a very long road and long track to pursue. And of course, the supremacy of US Supreme Court rulings versus that of the World Trade Organization, well, time will tell. But this is a major clampdown on social media. Of course, the US government has feared for a long time China's domination of technology. Is this a new era of regulation, a gain of some social media platforms? We shall see. And finally, good news out of Africa. The South African economy is set for recovery in 2025 after almost a decade of stunted growth. Now, a survey conducted by Bloomberg of analysts are predicting 1.7% growth in GDP on average this year compared to 0.7% last year. Now, the reasons for this: consolidation of the government, national coalition government of the ANC and the Democratic Alliance, that seems to be taking root and has enabled some post-election stability. Of course, we're also seeing a great deal of reforms that are positively impacting state utilities and infrastructure firms such as Transnet and Eskom. Stability in the rand as well, the South African currency, and really just an uptick from positive sentiment after the election. So we'll be tracking South Africa's economic growth in 2025. Well, that's it for my top picks for the week. And now for some other top stories around the world. We'll start in China. December trade data from the country exceeded expectations by a significant margin, with exporters in that country continuing to front-load shipments as concerns about additional tariffs grow and the country's stimulus measures seemingly supporting demand in the industrial sector. According to data released by China's customs authorities early in the week, exports increased by 10.7% in US dollars from a year earlier, exceeding a 7.3% growth predicted by a Reuters poll, which contrasted with a 6.7% growth in November 2024 and a 12.7% spike in October 2024. Customs data also revealed that imports increased by 1% in December last year from a year earlier, which reversed the contraction in the previous 2 months. Now, after 2 straight years of decline, the worldwide smartphone market finally recovered in 2024, growing by 4% annually. Samsung, the South Korean device manufacturer, outperformed other manufacturers in terms of smartphone shipments for the year. That's according to preliminary statistics from Counterpoint Research's Market Pulse. This expansion is a result of improving macroeconomic conditions, which raised consumer confidence and stimulated demand. In 2023, smartphone sales did fall to their lowest level in 10 years. According to persons familiar with the situation, members of President-elect Donald Trump's incoming economic team are talking about gradually increasing tariffs month by month in an effort to increase negotiation leverage and prevent an inflation rise. According to sources, one proposal would rely on executive powers under the International Emergency Economic Powers Act and entail a schedule of progressive tariffs that would increase by roughly 2 to 5% per month. Now, back to Africa. Following China's reduction of infrastructure funding for projects in the country, President William Ruto of Kenya has announced that he's begun negotiations with the UAE to obtain financing to finish a regional railway. As part of China's Belt and Road Initiative, the railway that connected the Kenyan port of Mombasa with landlocked neighbors terminated in the Rift Valley in 2019. That's around 468 kilometers short of the Ugandan border after Beijing withdrew its sponsorship. In Nigeria, consumer prices in the country rose at a faster annual pace in December, removing any hopes for a rate cut at the next Monetary Policy Committee meeting later this January. The Consumer Price Index showed an annual inflation rate of 34.8%, according to the National Bureau of Statistics, which released its report on Wednesday. The annual rate was 0.2 percentage points higher than December. However, monthly inflation, a more accurate measure of current inflation, which gives the current situation, dropped to 2.4% from 2.6% in November.